Take a look at the amount of money in the reverse repo market, over $2 trillion. The reverse repo market it's a mechanism whereby when the banks have in their mind too much money, they will give it to the Federal Reserve for overnight loans. So right now, it is the idea of the banks that, hey, we would feel safer putting $2 trillion in the reverse repo market, safely parked at the Fed, earning 3%, than lending it out to you or I for a car loan or a home equity loan or even a credit card, earning many times what they are getting with safety. What they are telling you without saying it is that they're scared.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for January 3rd through January 10th, 2023, while supplies last. This week we feature both of the only regularly minted 4/9 fine silver coins in the world. Silver Maples backdated and Silver Kangaroos from 2022 at just $4.19 over spot. Both the backdated Silver Maples and the 2022 Silver Kangaroos are renowned for their purity, recognizability, and design. They both come 25 to a tube, and Maples are 500 to a box, while the Kangaroos are one of the most affordable boxes around with just 250 coins. We have both coins in stock and ready to ship, and both at just $4.19 over spot. And finally, both are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. This is Dunnigan Kaiser. We're glad to have this returning guest, Andy Schectman, the CEO of Miles Franklin Precious Metals, joins us for this first weekly update of the year 2023, and this is January 3rd, 2023. Andy, thanks for coming back on Liberty and Finance.
Dunnigan, great to see you. It's like Groundhog Day all over again. And I think 2023 is going to be an interesting year. Certainly 2022 was, and we'll talk a little bit about that. But I think 2023 will, if I had to guess, will take the cake.
Well, Happy New Year to you.
Likewise.
And last time we spoke, you said you were really looking forward to a little break over the holidays and getting some eggnog and being with family. And we did the same, and glad to hear that you had a recuperating time.
Yeah, it's important. You know, it seems that the last few years have been very chaotic in so many ways, not just in this industry and the things that we talk about, but life in general. So, you know, that's part of the reason I think, as we talked about, we saw a slowdown across the board in the entire industry. Everyone I talked to said the same thing. It was like a light switch shut off right around Thanksgiving. And it makes sense to me, Dunnigan. It makes sense in that we've all been bottled up for so long, caged up. The ability to go out and travel and see family and enjoy the holidays and kind of let your hair down without, you know, the burden of a pandemic hanging over, I think made a big difference. And I think it was just nice for people to get out and enjoy the holidays. So, but it's good to be here, and certainly it was nice to have that time. But I'm recharged and looking forward to seeing what the world's going to throw at us here this year with you every Tuesday.
That's one of the things you just alluded to a minute ago, is a look back at 2022 and a look ahead at 2023. Are there any particular highlights you want to call out to bring people's attention to of the context that 2022 provides for us and the outlook that you see in the tea leaves for 2023?
Yeah, well, first I'd like to talk about, let's just look at the basics. So gold and silver outperformed, both gold and silver outperformed the stock indexes, the bond market, the real estate market, and the crypto market in 2022. And yes, there are those that would argue that it did not accentuate the way that many people thought it would. And I would argue that the jury is still out on that the music hasn't stopped yet. But certainly when we look at it in respect to traditional assets and in terms of the crypto market, which seemed to outpace everything for the last several years, gold and silver did very, very well. In fact, Friday's close, and it's up again here today as we speak Tuesday, but Friday's close prior to the end of the new year was the highest weekly finish for gold in 6 months and the highest weekly gold close for silver in 8 months. And, you know, when you look back over the correction that we had in the middle of the year, September, October, we see gold up over $200 since its low point and silver up by 6 points from their respected lows. It's also important to reflect on the strength of the dollar. You know, gold was unchanged, basically, almost to the penny, unchanged in 2022 from the start to the end on a year-end basis in dollar terms. But in terms of like the UK or the euros in the UK, in euros, gold was up 5.8% and up 11.8% in UK terms, and setting an all-time high against the euro 19 nation euro currency at 1,902 euros. And you know, so what we were seeing here in the States is an example of a very strong dollar that was making gold and silver not appear the way that they did the rest of the world. I think one of the takeaways that I look at 2022 is that the central banks have an insatiable appetite for gold and seem to not be able to get enough. In fact, in the third quarter, the official net gold purchases were approximately 400 metric tons, somewhere in the neighborhood of $20 billion, and it was the most in over a half century. And if you look at a graph, you'll see there's really all the way back, there's really nothing even close to it. The next closest was somewhere, I think, like 2018, there were 247 tons purchased by the central banks, nearly double what we saw this year, or in 2022, rather. You can look at specific examples of countries like Turkey, who we talked about for a very long time, were leading the way in 2022 with their gold purchases. 38.9 tons of gold just in the month of November. That the year-end totals for Turkey ended up somewhere north of 225 tons compared to the only 56 tons they purchased the year before. You can look at a country like India, who purchased over 300 million ounces of silver. That's more than 35% of the total global mine supply. So the central banks are gobbling up metal. That is absolutely a certainty. And when we look at the way that this is affecting things, for example, on COMEX, we noticed that COMEX had 354 million ounces of silver at the beginning of the year, ended the year at 299 million ounces. Almost all of the decline in the silver market on COMEX, roughly 55 million ounces, came out of the registered category. That is the category of bars that are available for delivery. It is what is backing the price-setting mechanism of the West, and down to roughly 34 million ounces. That's it. So more silver was deducted out of the registered category than is left in the registered category, which is roughly 10 times less than the country of India purchased. You can see we are beginning to draw down on the major supply centers. That was a big theme of 2022. But interestingly enough, everyone talked about silver all year long, the percentage decline in silver, which worked out to 14% decline in the registered COMEX. Gold inventories fell by over 30%, from 33.6 million ounces to 23.2 million ounces. It's a much larger, actually, drawdown of supply than everyone focusing on silver. Quietly, gold is being drained at the same time. We talked about how in one day some mysterious buyer was able to purchase 26 million ounces, or 45% of all the kilo bars held on the COMEX. This is a very unusual time. In all the years I've done this, we never would see anything even remotely close to the number of ounces that have been drawn down off of the exchanges. And it's not just the COMEX, as we talked about quite a bit on your show. The available inventories on the London Metals Exchange have plunged. And it's not just gold and silver that we always talk about. They have 6 main metals traded on the London Metals Exchange. And those metals cumulatively, 22 saw a 66% decline on average, 72% in aluminum. Zinc shrank by 90%. And so the countries that are pulling all of this metal off, and I'd argue they're the BRICS nations, predominantly China, they look at these commodities as wealth. And so they are accumulating a stockpile, a war chest, if you will, of everything from industrial metals to precious metals and base metals and everything in between. And I think that this is something to really take note of, that the epicenter of availability in everything from copper to gold and everything in between is showing massive drawdowns. And this is, I think, a trend that we will see certainly moving forward. When we look at silver in 2022, the Silver Institute came out and told us that this is the largest deficit that we've seen in decades, multi-decade deficit between the amount of silver that was demanded and the silver that was pulled out of the ground. And, you know, it's interesting that they're telling us it was almost 200 million ounces, about 195 million ounces shortfall. But no one ever talks about the fact that the Silver Institute throws into this equation recycling. And recycling in 2022, I believe, was somewhere in the neighborhood of 845 million ounces. They expect it to increase this year and for a third straight year. And, you know, you're talking a huge amount of silver recycling. And if you pull the recycling out of the numbers, the total mine supply then drops from, you know, somewhere in the neighborhood of 800 million ounces to 662 or 663 million ounces, which really shows you the discrepancy between mine supply and demand, and it is growing. This year, there is a forecast of over 1.1 billion ounces that will be demanded, and against a shortfall of at least a couple 100 million ounces. And when you pull recycling out, that number could be as big as 400 to 500 million ounces. The moral of the story is silver is depleting. And when you talk about pulling recycling out and only looking at available mine supply, it is becoming harder and harder and harder to pull metal out of the ground. And this is why the silver to gold ratio is so very important. A price ratio of 76 to 1 right now, in relation to a mining ratio of 7 to 1. But I think it's really important to underscore something too, Dunnigan, and that is that the silver prices, closing the year at over $24 up for the year, even though they didn't go crazy, they held up very well in the face of such a strong dollar, multi-year highs in the dollar, right? Everyone talked about the strength of the dollar. From a perspective point of view, the last time the dollar was this strong, silver was less than $5 an ounce. So this just goes to show how strong silver demand is holding up in the face of an incredibly strong dollar. And it's important to note that over the last 2 decades, the correlation between the US dollar index and silver futures is really crazy. It's uncanny, as a matter of fact. When the US dollar rises, silver gets hit. When the US dollar falls, silver outperforms. And, you know, because all of the global commodities are priced in US dollars, as the US dollar begins to weaken, and we've seen that here the last few weeks of the year, it seems to have turned over. As the US dollar weakens, we would expect all commodities to catch a bid. And maybe that's exactly why you're seeing not just precious metals disappear off the London Metals Exchange, but also the base and industrial metals. So a very big deal. When we talk about a gold to silver ratio right now of 76 to 1, roughly, that implies it takes 76 ounces of silver to equal 1 ounce of gold. And from a historical perspective, the last 200 years has averaged roughly 43 to 1. So we are way above where it is averaged for the last 200 years, knowing also that it's coming out of the ground at 7 to 1. You could argue we're 11 times undervalued in silver just based upon its geologic footprint in relation to gold. But more importantly, we did see a ratio that peaked at over 92 to 1 this year. And any time in history where silver has achieved a ratio in comparison to gold of 92 to 1 or better, It has started an epic turnaround, and in some cases it took a few years. Other cases, like in 2010 to 11, only took a few months. But the movement has often been explosive. Now, this has happened 4 times since 2000. I would expect this one to be much, much, much stronger because of the drawdown in physical supply off of the COMEX. So, from a perspective of what we saw in 2022, just specifically talking about the metals and what we see moving forward, I am incredibly optimistic that 2023 will finally usher in the prices that many of us have expected for a very long time. And that is mostly based upon things such as an overly strong dollar that seems to be turning over, massive industrial demand, massive demand from the sophisticated accredited investors who not only are buying everything in the retail space, but also drawing down from the COMEX and the LME. I think there is a lot of reason to be optimistic as it pertains to what the price will be in 2023. And 2022, or the very end of it, I think is really showing us the setup. And the setup is now in place, done again, for massive price rallies into the new year.
In the middle of that update, you mentioned record purchases by the country of India, notably among the BRICS nations. That's been another theme that you've emphasized over the past year plus 2 years with us, and it's really gotten the attention of many other analysts and commentators, et cetera, in the last couple of quarters, specifically the fourth quarter especially. What are you looking for in 2023? What's the very latest updates that you have on the BRICS phenomenon of splitting the world between East versus West, and the BRICS particularly focusing on commodities and metals as real wealth?
Dunnigan, I take great pride in the way that we've been talking about BRICS for the last few years before anyone. And it really dominates my thought process. So I scour everything I can find to find what is new. And as I've often spoken to you about on your show, when you and I started talking about BRICS in 2020, there was a piece here and a piece there, and a few weeks later another piece, and we had to really try and paste these things together in what I would typically call a linear progression of events with you. And now it seems that you don't even have to look very far to see these things starting to really gain momentum. One of the things that I talked about at length over the last few years is the weaponizing of the dollar. We talked about how, at least in my mind, the weaponizing of the dollar against Russia, kicking them out of SWIFT, opened the eyes of many people around the world, other countries who said, hey, we need to find an alternative to the SWIFT system, to the dollar. This could be us. We may be next on the hit list. And I think it's very important to hear what I'm about to say to you, which is only going to accentuate and accelerate the de-dollarization across the globe. On Friday, Russia's finance minister announced that their national wealth fund has doubled their allocation up to 60% of its holdings in Chinese yuan and up to 40% in gold bullion to reduce dependency on currencies from the so-called unfriendly nations. Simultaneously, the fund reduced its holdings of the British pound and the Japanese yen to zero. Historically, the fund has been a holder of dollars, yen, euros, and Great Britain pounds. That's not the case anymore. Currently, it's been estimated that China, we've talked at length about how they've been stockpiling commodities, but it is estimated that since 2019, China now holds 80% of the global copper inventories, 70% of the corn inventories, 51% of the wheat, 46% of the soybeans, 70% of the crude oil, and now over 20% of the aluminum inventories. And now China is aggressively stockpiling just about every ounce of gold it can get. And, they're also striking relationships, as we've talked about, with all of these countries in Africa and South America, but they are doing it in what is more of a cooperative event. It is not about protecting the Saudi kingdom. It is about equity and respect. And more important, China has offered cooperation in building things downstream, in building infrastructure to help build up these countries in exchange for trade in those commodities. But one of the reasons that I think that this is really a big problem is going back to the weaponizing of the dollar. This is a huge problem because it was just the other day. In fact, it was, I think, last Friday that the European Union moved to legitimize using the frozen funds of Russia to rebuild the Ukraine. In fact, they have decided to use the confiscated funds to finance the complete and costly reconstruction of the Ukraine. So it's one thing to sanction and freeze. It's another thing to completely and totally confiscate those funds. And so you are seeing a massive de-dollarization. One other thing that I'd like to mention regarding what's going on with the BRICS nations. So Russia, Iran, and Venezuela account for 40% of the world's proven oil reserves. And each of them are currently selling their oil to China right now for the renminbi or for the petro yuan. In both cases, they are both convertible into gold on the Shanghai Gold Exchange. The other countries, for example, the Gulf Coast countries like Saudi Arabia, account for 40% of the proven oil reserves. And we know that Saudi Arabia and other countries in the Gulf states are selling their oil and are being courted by China to sell their oil for renminbi and for the petro yuan bond. But there's also the remaining 20% of the proven oil reserves, and in North Africa and West Africa and in Indonesia. North Africa is dominated by Russia. West Africa is now being dominated by China. But Indonesia has a mind of their own. And here's a new one that I haven't heard of until just recently. We can add this to the list of problems. Indonesia has just, and they've been a OPEC member since 1962, has just called amongst all of the OPEC countries for an OPEC-style cartel for battery metals for electric vehicles. And, all I can say is yikes, because when you realize that the majority of all the rare earth metals come from places like China, we're moving away from fossil fuels and to a battery-powered environment where the majority of all of the proven supplies and resources for battery-powered vehicles are in places like Indonesia and China, who are now calling for a cartel, if you will, very similar to OPEC. And all of these countries who are on the Belt Road Initiative, part of the Shanghai Cooperation Organization, and on the BRICS nations list is very frightening. You are beginning to see all of the commodities that are so very relevant to the world are being accumulated, produced, and hoarded by the countries that are forming this new alliance against the West. It is starting to speed up dramatically. So what does all of that mean? I think what it basically means is it's the end of the petrodollar, and it is the dawn of the new petro yuan, or the BRICS nations currency. And I think 2023 will be the year of the BRICS. I truly, truly, truly believe that it is the year of the BRICS. And when you see countries sanction and freeze assets, but then instead of giving them back, actually confiscate them and use them to repay for the rebuilding of the Ukraine, that's the nail in the coffin. If that doesn't accelerate the de-dollarization from these countries, nothing will. And I think we'll start to see that very swiftly here early on in 2023.
It's interesting because you're talking about so many countries in the world pivoting away from the dollar and into real things, commodities and metals. It's interesting because even in the West, where the banks are still trying to look like they're holding it together. We saw a video that came out. We're going to try to get a link to it to put in the description of this video's description, to a meeting at the FDIC where an FDIC lead is saying, we've got problems, we've got strains, we've got risks, but we shouldn't let this get out to the general public. We'd want to stop short of letting the general public know about that, because that might undermine confidence in the banking system. That would be an unintended consequence, but we do want to inform major money managers, major fund managers when that occurs, but we don't want to be informing the general public. And just as you keep connecting the dots between different phenomena, we've talked over the past couple of quarters about increased challenges that ordinary clients and some rather extraordinary clients have had trying to get their money out of the bank. And what can you tell us about your perspective or any additional insights you have about these strains in the banking system that they don't want to tell the general public about?
Well, it's very obvious. I mean, during the pandemic, the banks were allowed to relinquish their reserve requirements down to zero. Now, I don't know if that's ever come back, but it was from a very low point to begin with, under 7 or 8% max. So in other words, the banks hold very little in terms of capital and are very over leveraged and systemically tied together. There's no question but that the banks are strained. When we did that $50 million order in July, typically a sophisticated investor doesn't want anyone to know what he or she is doing. But her whole objective of having us tell the public about it was not to tell the public that accredited investors were buying large amounts of gold and silver, but rather that here's an investor, or an accredited one and a sophisticated one, who had close to $60 million in a bank account, and it took the better part of 5 days to get the money out of the bank, and really culminated at the very end with threats that I'm going to the regulators if you don't give me my money. But go to the bank and try to take out $5,000, and I guarantee you they ask you, what do you plan on doing with it? The other day I was at the bank, and a woman asked to have $7,000 in cash taken out right in front of me, an elderly lady. And they said, I'm sorry, that it's been during the holidays, we've had so many people withdraw cash. The best I can give you is $4,000. And I thought to myself just how frightening this really is. I think you have to ask yourself the question, is the return that we're getting? Yeah, we've seen rates rise, but not in the savings or checking accounts, ironically. Those are still next to nothing. And is the risk that we have, the systemic risk, the bail-in risk, FDIC, as you mentioned, well, they're a scam. You look at how much money they have in the FDIC kitty. If a bank like Wells Fargo or B of A went bankrupt, they wouldn't have enough even to cover that, let alone a systemic breakdown of the system. And look, you can take it a step further, Dunnigan. Take a look at the amount of money in the reverse repo market, over $2 trillion. The reverse repo market it's a mechanism whereby when the banks have in their mind too much money, they will give it to the Federal Reserve for overnight loans. So right now, it is the idea of the banks that, hey, we would feel safer putting $2 trillion in the reverse repo market, safely parked at the Fed, earning 3%, than lending it out to you or I for a car loan or a home equity loan or even a credit card, earning many times what they are getting with safety. What they are telling you without saying it is that they're scared, because banks make their money by lending. That's how banks make money. They make money by lending it and making the spread between what they're paying for that money and what they're lending it out at. When the banks would rather give the money to the Fed in massive quantities for leaving huge amounts of profit on the table, it tells you they are very, very concerned, and it betrays any positive rhetoric that you may hear. So I think when people are weighing the pros and the cons of leaving money in the bank, you're earning next to nothing. There are bail-in legislations, and for those people who at this point don't know what bail-ins are, they really should just simply Google bail-ins. But I'll give you the Cliff Note version. The way that it works now, Dunnigan, with bail-in legislation, the bottom line is that the depositor is nothing but a general creditor to the bank. And so when you talk about the risks involved with leaving money in the bank, the systemic nature of all of these banks who are over leveraged and undercapitalized, earning in your bank account, under 1% in most cases, one has to wonder, is it worth it? Pulling money out of the bank is like pulling teeth, and the return that you are receiving is arguably not commensurate with the risk that you are facing. For the very first time, really, in my lifetime that I can think of, where leaving money in the bank has a risk attached to it that most people never would have ever thought of. You think of putting your money in the bank as the safe place to put it. Well, I could argue digging a hole in your backyard and putting it there is safer than leaving it in a bank, where if there is a problem, you have a real problem getting your money out of the bank in that instance if they enact things like bail-in legislation or money market gating, which we've talked about before. But it doesn't surprise me at all. Anyone who's tried to pull out over a few $1,000s in cash out of the bank will understand exactly what we're talking about.
Yeah, and there seems to be even special attention being paid to people who are sending bank wires to pay for gold and silver purchases. We've had them getting some fairly intrusive questioning from the banks, and some of our subscribers who are associated with or have experience in the banking system say, hey, they've got fiduciary responsibilities, similar to that what we have in our anti-money laundering and know your client training that we go through on an annual basis for licensure as bullion dealers. They have responsibility to make sure that their clients are aware, or they're not being dragged into some kind of money laundering or something like that by being asked to send off cash to some unscrupulous dealer. But in some cases, it sounds like the level of questioning has become kind of over the top, and it's hard not to wonder if there's also in the color of we're protecting our clients, we're also, just like Jed Clampett, he had his money in the bank there in Hollywood, the banker always broke a big sweat whenever Jed said, maybe I should take my money out of the bank. Oh, no, Mr. Clampett. Oh, no. So anyway, it sounds like maybe a little bit of self-serving concern.
Look, Dunnigan, I think there's no question but that the banks are reluctant to let money out, whether it be trying to take a cash withdrawal of $5,000 or a wire to purchase precious metals for $50,000 or anything in between or on either side of it. There's no question but that the banks are concerned and probably have been alerted to it. And it doesn't surprise me one bit. The more people that pull their money out of the banks, the greater the instability these banks will have. And what starts as a trickle can turn into a flood very, very quickly. So when you see FDIC coming and making these admissions and it leaks out that they don't want the public to know about it, putting it together with how difficult it is to get your money out of the bank, whether it be a wire or just a cash withdrawal, it all starts to make perfect sense. So yeah, I think people should certainly be aware of these types of challenges, and this is just another reason to mitigate your exposure to an over-leveraged, undercapitalized, invasive banking system that the return is not commensurate with the risk that you're facing whatsoever.
In the face of that, many people who are waking up are deciding to lower their exposure to potential banking system risk by acquiring real assets, paying off debts, doing all kinds of prudent things that our grandparents always told us we should do. And you have a way of helping people along that way by offering a special of particular value each week. Could you clue us in on what's available in the coming week here so people can jump on that opportunity?
Yeah, we're going to continue on the silver bandwagon. Ultimately, Dunnigan, I believe the place to be is gold. And we've talked a lot about this as gold was reclassified the world's only other tier 1 reserve asset in 2019. And it certainly underscores why the banks have been so voraciously accumulating it. But we're also seeing central banks now accumulate silver. And I think silver, to me, represents the most undervalued asset on the planet and a pathway into achieving more gold, to accumulating more gold. As we talked about, whenever the ratio gold to silver hits 92-1, the 4 times since 2000 has embarked upon a massive change where it inverts and gets closer to its 200-year average of roughly 42-1. Bottom line is this: there are very few assets on the planet that have the type of potential that we see in silver. You know, we talk about how silver is used up in industry. Look at all the Tomahawk cruise missiles that have been fired off in the Ukraine. Those that, you know, that all of them have roughly a mint box of silver in the tip, 500 ounces, almost to the ounce, in the guidance system of every military grade missile. And so when you talk about the depletion of silver, that's just another area where once they fire that missile, the silver is gone forever. And this is an asset that is depleting in nature, but is being drained down by the biggest, most sophisticated money in the world from the exchanges. What is ironic about all of this is that never in my career, and I asked a veteran of 50 years in this industry, I've been doing this for 33, have you ever seen a period of time where premiums have come down the way they have over the last month and a half? He says, not even close. And it caught everyone off guard. And I want people to understand that the current special that we are selling right now, the Australian kangaroo, is one of two items that we are specialing. We paid more for than we're selling them for. And I know people have a hard time believing that. We had a very good year, and we make a good living in this industry, but there's a lot of risk involved with it. And this is a perfect example. In order to keep supply coming in, since 2020, we have had to go anywhere from 8 to 16 weeks out and commit and pay up front and hedge and run logistics on product from all around the world. There was no exception in these kangaroos, which were purchased as 2022s in October. And when we purchased those, October, November, the premiums were much higher. And now the premiums that we're selling them for, because of the slowdown in the industry coupled with the new allocations of 2023s, see an industry that has literally cratered premiums. Now, I don't think this is anything substantive or long-lasting, but I do want people to understand that we share in the risk. We definitely share in the risk with everyone, because here we have millions of dollars worth of silver kangaroos that we paid as much as $2 an ounce more for just in the premium that we are selling them to the public for now. So in any case, we have the 2022 silver kangaroo and the assorted backdate silver maple leafs. And at the premium that we're selling them for at $4.19 over the price of silver, that's as low as we've sold them for literally since 2019. It's as good of a buy as you will ever find, I think, at least at as good of a buy as we've seen in the better part of 3 years. And when we look at silver as being the most undervalued asset in the world, remember, it's a pathway into accumulating a whole lot more gold when that ratio finally corrects. And the way that it has the 4 times preceding since the year 2000 tells me that there will come a time in the near future where we see a ratio of 40 to 1 or better. Maybe it even gets closer to its geologic ratio, single digits. But whatever it may be, when you're buying it near 80 to 1 and the ratio for 200 years is averaged 40 to 1, it gives you the ability to buy silver now, wait for that ratio to come back to correct, to revision to the mean, and then convert into gold. That is the ultimate plan. And as I mentioned at the onset, sometimes these revisions or regression to the mean happens in a period of a few months, like it did in 2010 and 2011 in 7 months. Sometimes it takes a few years, like it seems to be taking this time. Have some patience, because I think this will be the trade of a generation. This is, in my opinion, the buying opportunity of a generation, the value of a generation, an asset that is so massively needed in so many ways and so undervalued by so many metrics. There are very few things that I've ever seen in my life that offer this type of potential. And that's never the reason that I offer or recommend people buy metals. It's not an investment to me, it's wealth. But this has all the characteristics of one hell of an investment. So we're sticking with silver right now, and to do the 2022 kangaroos and the assorted backdate maple leafs, both for $4.19 over, both in stock, both ready for immediate delivery.
Well, Andy, we're always grateful for that. And I've seen already in this first day of 2 of January a dramatic uptick in the amount of client activity. So it seems like that people taking the last part of the year off for time with family and holiday and church and so on seems to be playing out as it has in the past. And now people are back to business here, trying to take care of their family's financial futures. And as part of that, we're always grateful for your presence here with us on Liberty and Finance and kicking off this new year. Look forward to many more, and just always grateful for you being here with us.
I look forward to seeing you next week, Dunnigan, and happy, healthy New Year to you and yours.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.